Good morning. It is Monday, May 13th, and we're just getting the week started after a holiday weekend for us in the United States. But last week, when we ended, it was a very quiet week. We can see right here that we had a very low volume throughout the entire week, well below the average. And so we just drifted higher on low volume. Now, if we drift higher on low volatility, that's excellent. And we did have decreasing volatility in the VIX. But if we drift higher on low volume, that is low conviction, and it is a little bit more difficult to gauge the quality of that move. So this week, what we really want to see is volume coming in, and that will give us a lot more conviction, whether it's higher or lower. So right now, based on where we are, it's very difficult for us to have any sort of strong probabilities or strong feeling for whether the market is going to go higher or lower. Just based on the action of last week, we would lean a little bit towards higher. But if we have low volume, then it's going to have a lot of difficulty getting above that all-time high. If we do get above the all-time high, that would stimulate a lot of money or a lot of liquidity to come into the market. And then we would see a rapid movement above the all-time high, but we need to get there first. And with low volume, it's going to be a little bit difficult. So we really want to see strong catalysts during this week and see whether that can entice some volume to come in and give us some price movement. Otherwise, we might just be kind of drifting around up and down, maybe a little bit of direction, but usually you can't get above strong resistance like an all-time high just on low volume. So let's see how our futures are doing, and then we'll see what types of stimulants we have in the market for this week. Futures, we've got the S&P 500 up about quarter, so 25 basis points. The NASDAQ up more significantly, almost 40 basis points. And the Dow about 20 basis points. So just at the edge of non-random for the NASDAQ, a little bit more random for the Dow and S&P. So we are definitely leaning towards the bullish side today, which is great news for a Monday morning. Mondays tend to be rotational days where we're discovering price action and we're discovering which way the market's going to go, which sectors are going to lead, which sectors are going to lag. So for us to start out just broad-based higher, that's good news on a Monday. It's just that we don't have huge amounts of conviction. Only NASDAQ is sort of beyond random at 35 to 40, 35 to 40. Normally we'd call about 33 to 35. That would be random. So it's just at the verge. So we will need to see throughout the session, see how it goes. If we continue to move higher, if we bounce around, or if we pull back. Last Friday, we said because of very similar circumstances as today, we said that it's going to be very difficult for us to get above that 522 level. And actually, we hit it almost right away, but then we did back off and then bounce between the 520 and 521. Remember, this 520 and 522 was, we identified it as an entire region of resistance for the market. And if we can get above it, then we'll go to challenge the all-time highs. So far this morning, it's looking like we are right at that 522 level again, and maybe even popping up above it. So we'll see. It may be clear skies to the 524 and then resistance for the rest of the day. We are just leaning towards the bullishness today, although because of the PPI tomorrow, is that right? Well, we'll check in just a moment. PPI tomorrow, CPI Wednesday is what I remember. It will probably be difficult for us to have a strong conviction move before tomorrow. PPI might give us that stimulation. So let's take a look at those economic reports. Got shifted out of order. Okay, Monday, not much. We've got one Fed speaker, but that's not going to have a lot of weight since we have PPI tomorrow. And tomorrow let's look at year on year, 2.1, we're expecting 2.2. So we are expecting still inflation. And if we get anything above 2.2, that's a really tight consensus range. Basically, everyone thinks it's 2.2. So if we get in above it, that's not going to be very good news for the market at all. And of course, we come in below, the market could become very enthusiastic. This is going to be important to watch since that consensus range is so tight. If we have any sort of miss to the upside or downside, that will probably be a very large stimulant in the markets. And then we have an even more important report, which is CPI on Wednesday. And we've got again, a pretty tight range in the consensus range, 3.3 to 3.5. Looks like our consensus has us believing that we're going to move down, which is kind of funny because the last two times we've missed to the upside. So we'll see. I don't know if they have, no, I don't really see a history, unfortunately, but the last two times we missed, it might have been the last three times we missed to the upside. So for us to see a consensus coming down, that'll be really interesting. If we even get 3.5, that's going to be an upset to the markets. Retail sales also going to be very important. Retail makes up over 70% of the US economy. So this is going to be very important. Looks like we're expecting lower retail sales, which is not great news for the economy. And if the consumer is slowing down, GDP is slowing down. But of course, that is good news for the Fed because their actions right now are geared towards weakening our economy, increasing jobless claims. They have the dual mandate, they have inflation rate, they have unemployment rate. They're more focused on inflation, but their belief right now is that if we hurt the consumer, if there's less people with jobs, if there's less people with money in order to buy goods, then there's less demand in the market, and that would take prices lower and our inflation decreases. The kind of sort of neurotic side to that is that would work for consumer discretionary items, but they're measuring inflation based on their basket, their little CPI basket, which is full of consumer staples, meats, eggs, groceries. Of course, they say X food, X energy. Okay, great. Well, all right. So the other staples that people can't live without, so clothing, things like this. And those are things that we identify as we've got to buy even no matter what. And that's where our first dollars go to. And then our discretionary dollars go to everything else. So just hurting the consumer and their buying power doesn't mean that the core inflation is going to go down. It's not driven by the demand side for the most part. So I don't, that type of thinking in psychology is going to have limited use in reducing inflation, unfortunately. So in any case, that's their strategy for the moment. And we are expecting a lower CPI and lower retail sales. It's pretty significant on the consensus, but it's a very wide range. So probably CPI is going to have a stronger effect than retail sales because of that tight range that we have there. We've also got an energy report. These are less significant. And then Thursday, we've got import-export. That would figures into economy as well. So that will be important to watch. Fed manufacturing index is not going to be that meaningful after PPI. Jobless claims we get every single week, and it's been pretty steady. We got that weird little surprise last week in terms of the increase of jobless claims, but nothing to get excited about. That did give us a tiny little bit of a boost last Thursday and Friday. So if the retail sales and the jobless claims and the import export all point in and industrial production all point in the same direction, then they could all collectively, that could drive us higher or lower inside the stock market as well. So we've got a lot of potential stimulants in just the economic reports coming out this week. It could become a very active week. And so today we're going to expect a quieter, more muted session because we have day after day after day of important economic reports. So we're probably going to wait until tomorrow before we get a lot of price action. And then that could continue into Wednesday and Thursday. Friday looks very quiet. So let's take a look at our stocks that are reporting. Walmart, retail, very, very important retail. Home Depot, also very important retail. Cisco is tech. Matt is semiconductors, also tech. DE is Deere Farm. They're like Caterpillar. They do a lot of farming equipment. So it looks like we've got, those are going to be our most important ones. And then we've got, let's see. Boot Barn, nothing major, nothing else major over here. So Walmart will reflect importantly on the consumer, and same with Home Depot. These two could be a market moving. So if their sales hurt quite a bit, then that indicates a weakening in the consumer. Now, right now, it's difficult to gauge if that means down in the stock market or people then go and interpret that as a Fed action and say, oh, Fed is happy because we're down and so they might cut rates. That would be way too far forward thinking, but we've seen that type of thinking in the market as indicated by the Fed Watch tool, where we still have 8.9% probability of a rate cut in June and a 29% possibility of a rate cut in July. And you can see that that's increased. It's increasing. So it decreased here and then it's all over the week, but over one day it's increasing. So it's a little bit, the probabilities that have been predicted in the bond market have been off for over a year. So there could be that sort of twisted thinking where if Walmart and Home Depot do poorly, the market might interpret that as good news in anticipation of rate cuts from the Fed. So let's see how much. So this week, the CPI, PPI, that's definitely going to affect the bond market. So we'll see that bond market move, and then the secondary effect would be on the stock market. So we'll watch this carefully, see what happens with bonds. Do we break below this break below this gap right here, or this series of lows that we've had in the last week or so? If we break below, then that's weakening in the bond market, and at least in the current environment, that also means a weakening in the stock market. And then if we're able to move higher back up to this horizontal, well, at least very temporarily, that is a boost for the stock market that could send us to a new all-time high, but then the bond market would no longer support it for very long, and then we'd probably fall back down. So if we do make an all-time high or challenge the all-time high, it seems like we're not going to be able to get significantly higher because that bond market is going to be capped out and drag the equities market down with it. The other thing that's been playing into the market quite a bit is the dollar. The dollar came and hit this resistance purple line right here and started to trade back down. And today we are even lower. A weaker dollar means a stronger anything priced into dollars. So that includes stocks, gold, oil, commodities. So that will give us a little bit of boost, actually, just based on the tiny move upwards that we have today in the pre-market. That this is probably almost entirely explained by this downward movement in the dollar. There are other forces that operate on the stock market, of course, like the bond market. But right now, this early in the morning, before the market is even open, the stock market is even open, the currency market has been open. And so this movement is downward almost entirely explains, if not entirely explains, this movement upwards in the S&P 500. So if this keeps moving downwards, then we've got another force pushing this S&P 500 upwards. And so far, almost everything that we've talked about has been a force that pushes the S&P 500 towards the all-time highs. So we definitely have upward bias in the market right now, and then we'll see how strong that all-time high proves to be as a resistance. So right now, based on everything that we see, looking forward for the week ahead, we can probably expect a fairly bullish week unless these economic reports have surprises to the downside or these stocks. Really not too much on the stocks. There's only really 4, maybe 5 super significant earnings that are coming out. So not a whole lot, although they are significant. So they can move the market as well. So we just want to keep an eye on these 5 stocks. We definitely want to see how PPI comes out, CPI comes out, and then those collective economic reports, the ones that reflect directly on the economy, how all of those come out, the retail sales, the import-export, industrial production, all of this, jobless claims in the context of those other ones. And then that will help us, well, not help us, that will actually be what everyone is looking at and is going to react off of to determine which way this stock market is going to go this week. So far, like I said, it's leaning towards the bullish side, and it would take surprises in any of those reports for us to not be bullish anymore. This market is really looking for an excuse to have some money that has been on the sidelines come in. So if we can break that all-time high, if we can pop above with that 524, then we're probably going to see a good amount of liquidity come into the markets, which we can take us to 530, 535 region. And then we'll see from there, because by the time we get up to 535, our bond market may be hitting some resistance right here. And that's both the downward channel and the horizontal. So it should be pretty strong resistance. It should be reasonably difficult for us to get above this. And if we do get above it, it's unlikely to break through it the first time. It might just hit it, come back, hit it, maybe break through, maybe come back, maybe hit it, and then go through. It would take multiple times normally for us to break through a resistance like this. So that would limit or temporarily limit the upside movement of the S&P 500. We'll probably hit 530 or 535, come back, and at the very least retest it once. So that's what we're looking for this week. We're probably not going to do a whole bunch today, just like how the market is probably not going to do a whole bunch today. It's probably going to be very muted, and we're going to adopt the same strategy. So we're probably not going to put capital to work until tomorrow or Wednesday after we've seen a couple of these reports. So don't expect a lot of action in the market today because we have so much coming through the pipeline the rest of the week. All right, that's it for today. We've got about 10 minutes till the market opens. So I will see you in the aftermarket.